Where do money come from? Have you ever wondered where money actually comes from? You might think of the dollars in your wallet, the coins in your pocket, or even the numbers in your bank account. But the real story of money goes far beyond that. It's a tale of trust, power, and human ingenuity that has evolved over thousands of years. Money runs our economies, powers our societies, and is at the heart of modern life. But how did we get here? And more importantly, how is money created today? In this video, we'll dive deep into the fascinating origins of money, how it's made in today's world, and uncover some surprising truths about who controls it. Spoiler, it's not just about printing presses and mints. So let's unravel the mystery behind the flow of money and discover where it truly comes from. The evolution of money. Before we can understand how money is created today, we need to go back, way back. Thousands of years ago, money as we know it didn't even exist. Early human societies relied on bartering to exchange goods and services. If you had a surplus of grain and needed tools, you'd have to find someone who had tools and wanted grain. The problem with this system is that it's incredibly inefficient. What if you couldn't find someone who wanted your grain? Or what if you didn't need that many tools? This is where money comes in. Enter commodity money. Things like gold, silver, or even livestock that had intrinsic value. These items became mediums of exchange because they were widely accepted and held value on their own. Over time, societies started using metal coins made from precious materials. These coins were convenient because they had a standard value and were portable. Gold and silver, especially, became key to the concept of money because they were scarce, durable, and universally desired. But even that system had its problems. Carrying large amounts of metal was cumbersome, and the supply of gold and silver was limited, which made it difficult to expand the economy. This is where the real evolution of money began. The creation of paper money, and eventually the complex financial systems we have today. The birth of paper money and banking. The shift from metal coins to paper money marked a major turning point in human history. In the 7th century, China became one of the first civilizations to use paper currency. Instead of lugging around heavy coins, people began using promissory notes issued by merchants or the government, which could be redeemed for goods or other assets. These notes represented trust in the system that the paper was worth something. Fast forward to the 1600s, and we see the rise of modern banking in Europe. Banks began issuing banknotes as a form of currency that could be traded for gold or silver. This new form of money wasn't backed by the physical metal itself, but by the promise of the bank. This practice expanded the availability of money and allowed economies to grow faster. In 1694, the Bank of England was founded and became one of the first institutions to centralize the issuance of paper money. The introduction of central banking was revolutionary. It allowed for more control over the supply of money and laid the foundation for modern monetary policy. But even then, paper money was still tied to physical reserves like gold or silver, a system known as the gold standard. However, as economies continued to grow, the limitations of the gold standard became apparent. Countries needed more flexibility to create money to fuel growth, and they began moving away from it. The turning point came in 1981 when the United States, under President Nixon, officially abandoned the gold standard, ushering in the era of fiat currency. What is fiat money? So, what exactly is fiat money? Fiat money is currency that has no intrinsic value. It's not backed by physical commodities like gold or silver. Instead, its value comes from government decree. In other words, fiat money has value because we as a society agree it does, and because the government says so. Today, most countries use fiat money. The dollars, euros, yen, and other currencies we use are all examples of fiat money. Governments and central banks, like the Federal Reserve in the US or the European Central Bank in Europe, have the power to create more money or take money out of circulation. This is done through a variety of tools, including interest rates, bond buying, and lending to commercial banks. Fiat money has given governments greater control over the economy. For example, during financial crises or recessions, central banks can increase the money supply to stimulate the economy. When inflation rises, they can restrict the money supply to cool things down. This flexibility is one reason why fiat currency became the dominant system worldwide. But how is this money created in practice? Let's explore. How money is created today. Most of the money in modern economies isn't printed by the government. In fact, physical money, coins, and bills makes up only a small percentage of the total money supply. The vast majority of money in circulation today is digital, created by private banks through a process known as fractional reserve banking. Here's how it works. When you deposit money into your bank account, the bank doesn't just keep your money in a vault. Instead, it holds a fraction of your deposit as reserves and loans out the rest to other customers. If you deposit $1,000, the bank might keep $100 in reserve and lend out $900. The person who borrows the $900 then deposits it in their account, and the process repeats. In this way, banks essentially create new money through lending. This process is overseen by central banks, which regulate the amount of money banks are required to keep in reserve. By adjusting this requirement, central banks can control the amount of money that banks can create. They also use other tools like setting interest rates to influence how much money is in the economy. Another important way central banks create money is through a process called quantitative easing (QE). During times of economic stress, central banks buy government bonds or other financial assets from commercial banks, injecting money directly into the economy. This boosts the bank's ability to lend, further increasing the money supply. All of this shows that money creation today is a complex, highly regulated process that involves both private banks. It's a delicate balancing act to ensure there's enough money in the economy to promote growth, but not so much that it causes runaway inflation. The digital future of money. As we look ahead, the way money is created and used is continuing to evolve. The rise of cryptocurrencies like Bitcoin and Ethereum has sparked debates about the future of money. Unlike fiat currencies, cryptocurrencies are decentralized, meaning no central authority, like a government or bank, controls them. Instead, they rely on blockchain technology, a distributed ledger system that ensures the security and transparency of transactions. While cryptocurrencies haven't yet replaced traditional money, they represent a growing challenge to the current system. Some central banks are even exploring the creation of their own digital currencies, known as central bank digital currencies, CBDCs. These digital currencies would combine the trust and stability of fiat money with the efficiency and innovation of blockchain technology. In the future, we may see a blend of traditional money systems and digital innovations. The way we think about money and its creation is likely to change even more in the coming years. So where does money come from? As we've seen, it's not just about minting coins or printing bills. Money is a complex system that has evolved over centuries, shaped by governments, banks, and now technology. From the early days of barter to the sophisticated digital systems of today, money is all about trust and belief. Whether it's backed by gold, government decree, or cryptographic algorithms, money continues to shape our lives in ways that are constantly changing. As we move further into the digital age, the future of money could look very different, but its fundamental role in society will always remain. Thanks for watching, and remember, money is more than just what's in your wallet. It's the engine that keeps the world running.